Welcome back to Trade and Wait. We're going to utilize ICT-based trading strategies to analyze the SPY chart and maybe the MES if we have time. Going to utilize Alexander Elder's triple screen. And the triple screen ideal is the first screen is the trend. Second screen is, I think, called like the wave. So you only want to take trades that's in the direction of the high time frame. In this case, it's going to be the 15-minute as a scalper, which you'll soon find you can actually catch the entire range if you wanted to, right? Because this is a moving average. Don't shoot me. Anyway, it's the 18 and the 9. The red is the 18. The 9 is the blue one, and at the bottom here's a modified MACD. The black line is going to tell you the trend, the trend, and this blue one is, for me, is going to tell me when potential opportunities are there. Again, going to trade in the direction of the trend of the high time frame, and again, this in this case is the 15-minute, and the 5-minute we only want to take trades that's in the direction of the high time frame. So this run up is not in alignment with the directional bias here. And you can see here you have, let's erase that, not cause any confusion. So the charts are clear now. So this is the range of the previous day, the range of the previous days here. So this is the range here. Let's see. That's the range. So you had a run on stops, you have a break in market structure, then you have a retracement into an imbalance. And this imbalance is this gap up, look like a news candle gap up here. So this is a gap. Maybe we can highlight that here to here. All right, is that clear? It's clear, right? So that's the previous day. So have a trade into here, got another break in market structure here, retrace, another failure, and then a gap down when you have a gap down here. So you also have these levels. These are targets, these are potential support levels. So we have a gap down. So the order flow right now is bearish, regardless of the moving averages. Bearish. So we have a gap down, we have a retracement. That's also an optimal trade entry short. From here, we have a retracement eventually into that this bearish fair value gap. Like doing surgery, man. All right. So we have a retracement here, run up, traded into this volume imbalance. Got a small volume imbalance there. Where's my hammer? Obviously, having different approaches to the market is helpful. So you can utilize the right tools for what you're trying to do. So we have that volume imbalance there. Then we have 1, 2, right? You have this run on stops here, drop. So we have a break in market structure. Break in market structure. Then we have this retracement 1, 2, 3 drives pattern. That's a strategy brought up in three drives pattern or the three Indian pattern for price taking out liquidity. We have that here. All right, so you can take that as a entry if you wanted to here. Short. We have a run on stop. So now that's clear on this time frame. These are all right. So you want to get in alignment with trade setups, whatever setup you have. And again, we had that here. Optimal trade entry short with a couple of opportunities to go short and a return to origin as well. So this didn't quite get up into here, but that's okay, right? Sometimes you don't need these moving averages. You don't need any indicators, but technically using like the dollar as an indicator anyway, utilizing divergences on the NQ or the YM, right, as indicator as well. It's just not physically on one chart. So, right. All right. Are you able to read your tools as you see fit and be profitable without having as many distractions? And I'm not criticizing. I'm not saying this is the right way or the wrong way. If you're able to utilize these strategies to increase your confidence and increase your capability of making money, because at the end of the day, that's really all that matters, right? Show me the money, right? No one's trading just to be trading. Well, you can, that's all right. If that's your thing, then go ahead, right? So the first rule of trading, Alexander Elder brings this in Trading for a Living, and it's been repeated elsewhere as well. First rule of trading is actually to trade well. Trade well. That's your job, to trade well. Rule number 2 is to grow your account, right? So rule number 1 is to trade well, to protect what you came with, right? You know, protect what you came with. Break even traders, you came with 1,000, you leave them with 999. All right, you know, not too bad. I can say, okay, I'm not suffering. I'm not profitable either, right? That's that type of trader, right? Break even trader. Rule number 2 is to grow your account. So first is defense. Number 2 is some degree of offense now. And rule number 3 is to grow your account exponentially, right? Now you want to like right? What did I say this now, right? Now you want to put you know, separate the children from the grown men, so to speak. Or the grown woman, however you want to play it. So that's one entry. And that's actually during the silver bullet, the 10 a.m. silver bullet. This trade on the 15-minute is 10:15. On this time frame, if you utilize the entire range, this range from here to here, then you have an optimal trade entry. And you have this run down, run on stops. You may not have supported this as a return back lower, so you may have considered that to be turtle soup, taking out relatively equal highs on this time frame, both time frames. If you saw this volume imbalance and that's a thing of yours, you can say it traded into the volume imbalance and failed. So that's also like a failed breakout above this level, above these highs. So if you didn't see this fair value gap, it's here as well. You didn't see it, fine. Turtle soup is your, it's on a 5-minute. You have your, so you have this run on stops. This would be your market structure shift here. Right and below this swing low here and the retracement. And that would be your entry short. Right? And so I'm going to delete that that's the same. So that's a matter of fact. I'll do this. I'll leave that one over here on a 15-minute only, and we get look for another opportunity here. But this is a turtle soup. If you didn't see this entire range, you got a turtle soup entry here. You're not comfortable with turtle soup entry, you wait for the market structure shift because you have displacement, market structure shift, and your retracement into an imbalance. So here you have a balanced price range because you have this bearish fair value gap and you have this bullish fair value gap that's violated, right? So you have an inverted fair value gap here. And you can see it rebalanced. Inverted fair value gap. Let me see how accurate is that. So the first, it didn't trade to the top of it, but consequent encroachment, good. This first one run up, boom, valid, right? So I don't want to teach you guys bad habits. It's not bad habits, but you may not see it as a swing high because it's not a swing high here, but it's a swing high. This right here is a swing high in the 1 minute. Here you can see it. You gotta train your eye to see it. Train your mind, really. You see it's 1 minute is a swing high, and then you can do your thing here in terms of premium to discount, looking for an entry. So I utilize this swing low here, 1048-ish and 1035. Optimal trade entry at 1053. Short entry 1054. Drop. So you got another turtle soup. This right here is a turtle soup entry. Run on stops here. Market structure shift. Retracement into this same situation as the 5 minute, but on a lower time frame. This inverted fair value gap, this bearish fair value gap, and you place a stop above here, and that's your entry. But this will be an optimal trade entry short here. If you don't like that, you can utilize this. Let me isolate that to just the 1 minute. Optimal trade entry short here, utilizing the 15-minute. Is that the 5 minute fair value gaps? You have other stuff on this time frame, but again, identify the trend here. Look to get in alignment with the trend on the intermediate time frame that's here, and you can manage the trade on the intermediate time frame or the trading time frame, or the short-term time frame. So either one of these can be your trading time frame. It's whatever one you're comfortable with. But if you do trade on this 1 minute time frame, you want to have like a 2, 3 minute, 4, 5 minute chart or 15-minute chart, something higher to keep things into perspective, right? So that's a short entry. What else is there? And from there, you just trade in alignment with the trend. So this so you also have to keep it in mind again. So we said this is a silver bullet time frame, and we targeted the intraday high, intraday low here, right? Boom, took that out, return. So once price takes out a form of liquidity, it usually does some type of retracement. So you can utilize this level. So here, here we're utilizing, let's say utilizing the moving averages as a reason to hold the trade, because these are all valid reasons to hold the trade to at least here. At least here, when it broke above here and closed, you can get out, right? Right, or you can identify this pattern to break above break above this inverted, this bearish fair value gap. You can say, okay, I'm out, and you can see it broke above it, and then it kind of did some consolidation here above this fair value gap. So it was a legitimate reason to kind of get out. Also, keeping in mind, even more importantly, is time and price. this is the lunch hour macro. And what can we expect on a lunch hour is a retracement or some form of consolidation. Now, you can consider the lunch hour to start from 11 and end at 1, or you can say it starts at 12 and ends at 1, whatever the case is. So here you can see on this time frame, it's pretty much consolidated in this range from let's say 11:35 to, it broke that range here with this candle, but in this range to 12:40. So that's your lunch hour macro, right? So and again, you can see here that it broke below this swing low, and then so it broke below here, retest on this 11:30 candle, dropped, which is more definitive sign that price wants to go lower. Retraced again, traded above it, body stayed below it, so it retested this level again, failed, or you can say it pulled back into value between the two moving averages. Reason to go short again, took out that low, reason to exit if you wanted to. That's your rules. Retrace slightly, now you got relative equal lows, pull back into this level again, fail your test, short again, and we have a small fair value gap here. Would have been bullish, so now it's an inverted fair value gap. Inverted fair value gap here. Anyway, I was looking to put the midway point, but you can eyeball it like I always do. But you can see it pretty much traded to the top. Let's see what the numbers are. We have here, make that bigger for those in the back. 55332, and we have the 55335. So that's not bad. That's not bad, right? It's pretty good. 3-cent difference. So let's see, we have an optimal trade entry short here. So we have this swing high, this swing low, and that's 55334. And what was the level there? Swing high, 55332. Not it. Kind of fell short of 61.8, utilizing this level 55137, and this low is 55136. See, 55334. So yeah, still 2 cents off. Running theory, long wicks, we want to do that. So now I'll show the optimal trade entry. It still follows the rules of the A+ trade setup that I advocate for. Run on stops, which is this swing high, breaking market structure here, retrace above 50% in 50% of the range that causes a market structure shift into an imbalance or an inefficiency or a PDRA. In this case, it's an inverted fair value gap, continue short. So again, and we still with the trend. So the only thing that kind of like would have spooked you out is this consolidation knocking at the door of this swing low, retesting this level. Otherwise it's backward trend, and here we have here run on stops here, this swing low, and the moment that we have this swing low, have a break in market structure here, have a retracement down here, this right here probably wouldn't have went long here. You can see that the trend is kind of, this is also the start. We already in the New York PM session. So PM session, look for run on stops, which we have here. And we technically don't have it. This was a target dropping down, target, and we don't really have any near targets in the area. So at the consolidation, we have the run. Let's see, we have kind of hard to measure this as a measured move, but let's see. I'm gonna use this to this, make that orange or something, and then we're gonna copy that. And so to that low at least. Not quite a measured move, because I would actually do here to here. And that probably would be here to here. Not counting that, because you did have a retracement here. So let's see if that's valid. Let's take that off. And let's copy this. Let's see. All right, so that's your measure move objective. Here to here, retracement here to here. So this is a logical place to expect price to. It's a logical place to get out, lock in profits, and consider a change, some type of change, right? What's the ATR on SPY? Let's see. I got like indicators on here. Just this indicator, this shows me the 4-hour range. So you want to say like the 4-hour candle, so to speak, and you can see that it ran the 4-hour low, and then anyway, I'm gonna take that off. You can play around with that if you want. I take that off for now too, only because I want to. This is another way you can. Oh, clicked on the wrong thing, but where is it? Average true range. Well, you can get into that another day too. That's a good one. And average true range. We actually only wanted to show time frame for the daily. Why isn't it showing us? Oh, it's like flat. Anyway, so about $9, 9.28 is the ATR on SPY. So we have 559 to 550. That's one ATR move, average true range. So again, that's another reason. Unless you have any like a catalyst or some type of proof that price wants to continue lower, that's all we're looking for. That's your average true range here. And I'm only eyeballing it, so don't quote me, but 559 to 5. So let's say 559 to 550, which is 550. That would be it. Obviously, it went a little bit lower, but you understand, right? Obviously, the ATR is 9.28 on a daily chart. All right, so we have two reasons to consider this as a get out moment. We also have a curve or turn in the moving averages. And we don't go long if you're going to use that moving average strategy. Also here, here you have two standard deviations for two standard deviations. Let's try to bring that in the middle, in the center. All right, so two standard deviations. That's another reason to lock in profits and walk away, because you have the optimal trading tree. You have target 1, target 2, 1 standard deviation, broke below that into 2 retracement, and again it went lower. But that's that trade. But it consolidated. This is the 1 minute chart too. So it consolidated during this time frame. You could hold. You can hold if you like, or you can get out and reset. Take the lunch hour off. Come back at the PM session, which is going to give you entry here potentially, right? Like we already discussed that. And so that's that. The long entry here. Take that off. Then we have this big bull bar here. What time is this? The 2 o'clock. It's 2 o'clock. But here we have a run on stops. Relative high, you have a run on stops here. Yeah. Failure swing. Pull back. All of this is tradable, but you got to see what you got to see here. Like, you can utilize other things like with other strategies, but you probably can see it better on the 1 minute chart. Right. So me personally, besides all the stuff I just told you, probably like, yo, I don't trust it. This thing been dropping here, but look, it retested this level and then dropped again. So if you kind of sit at like the inflection point, then fine. But you want to give back money, then that's on you too. But anyway, you have here run 1, 2, 3 drive pattern again. You have a break in market structure here. You have a retracement into an imbalance. Let's see. It's a teeny weeny fair value gap and volume imbalance right here. All right, so let's highlight the. So we have a run on stops. You can either count this as the run. You can count that, or you can count this as the run on stops. And then you have a market structure shift, which is here with this run up, the market structure shift. Let's change that to like another color, right? So you got your market structure shift. Moving averages is like, yeah, I don't know what we doing. But anyway, this is just for confluence to hold the trade, for example, not necessarily to get into the trade because market structure is king. Price is king. Right side of the chart is king. But yeah, price is king, right? So yeah, we have that market structure shift. We want a retracement back down into an imbalance or optimum trade entry long. Almost definitely 3 standard deviations. So that's solid. That's on the 1 minute chart. But again, I wouldn't have took this off the 15 minutes. But you can see, hey, mean reversion on the 15-minute chart is a mean reversion trade back into some type of equilibrium, which is here we're using the moving averages. And if we utilize, Keltner channels, I could have used it on the ATR, but it's not going to be to what I wanted it to be. So let's see here. Now you can see 2.25 on the Keltner channel. It's at the bottom of the channel. It's riding the channel for some time. And then the mean reversion back to the moving average. And that should be a 20 EMA. So that's like one strategy. That's, well, we kind of like went over a lot. It's 28 minutes in. Obviously I feel a lot better. My voice is still kind of weak, but been talking all day. I've been fasting all day too, but you're not here to learn about me. You're here to learn about these charts. So let me throw that out there. Please like, comment, subscribe. Like, comment, subscribe. I don't know. Anyway, I don't know why I copy prices now. But yeah, this is the PM trade. This is about, does this count as your 2 o'clock silver bullet? It's technically a second stage. This would be turtle soup. Run on stops. Anyway, you can take this trade here, optimal trade entry into this order block, boom. Or I was telling you before I kind of like went off on whatever I was talking about. We have this fair value gap here. I've been looking at this 15-minute, 1 minute for a minute right now, and it's, oh, you understand my jargon. A minute means a long time, you know, depending on the audience. It's not a minute, actually 60 seconds. It's a while, a long time, right? So looking at this for a minute, that would be, so this would be your 150 candle, and I included like this small little gap here, which is like a liquidity void or volume imbalance. Included the whole thing. Bam. Right. You also have, like I mentioned, if you do trade order blocks, this is that one. So that would be your order block. Boom. So this would be your total swoop entry, and this would be your low risk buy. And you have a second opportunity at 203. Same principle here, looking for price. Oh, what I was saying is the PM session, after you had all this, right? ATR bomb, right? So what is the PM session targeting, right? Targeting the lunch hour highs. And that's exactly what it did. You can say, oh, test the lunch hour high, or retested this swing low that was broken. I don't know, whatever you want to do, however you want to see it. Look at price galloping up here, like I just love it. The market is so exciting. I was in the market opened up just now, 7 minutes ago. Anyway, it's okay to be excited. It's not okay to trade in an excited way, like being goofy, right? Don't be goofy, man. Somebody listen, man, this market, it's not like, oh, I lost today. It's literally you lost today and somebody won. There has to be losers. There has to be losers in order for there to be winners. I'm sorry. Sorry. Not sorry. Right? You want to be part of the winning team as usual. So anyway, so we targeting the lunch hour high. Is that valid? Nope. A little bit further over. That's here. Then all of this, all the fair value gaps you see now, because what's the narrative? The narrative is 3. So it's like the rule of 3 again. Is where is price coming from? Where is it going, and how will it get there? And that's what this trading time frame, the short-term time frame, or the intermediate time frame is. How will it get there? That's the how will it get there. The high time frame is where is price coming from? Where is it going? And number 3 again is on the intermediate or the short-term time frame, or your trading time frame, whatever one you want to choose. So all the imbalances you see now is either going to support price higher, targeting the lunch hour swing high, or retesting the level, however you want to, however you see it, however you see it. So we have another fair value gap here. And that's for that. That's for here. We'll push higher. You got a tiny fair value gap here, but I'm not doing all that surgery. So we have an order block here. There you go. Enough to hold. Run higher. Pull back down into this inverted fair value gap here. Trade it down into it. Into the order block again. Different order block. Push higher, trade it into this order block with this tiny fair value gap here. This is all optimal trade entry here, and here's your push, and that would be the level. Lunch hour high would be here, right? Valid. And let's make that nice and so hit that. And this is actually a market maker buy model. So it's your buy model. All right. And besides that, you can see here that we are still on trend on the 1 minute. So this would keep you in the trade. This would help keep you with the 1 minute trend, and you utilize this 5 minute to kind of like, am I seeing things clearly? Right? Because you have the EMA crossover here, which is this retracement. And this is, so this is like 5 minutes, you probably would have missed all this. Okay. I don't know. Like, so this is not to like base your trades off of. Price action is, right? This is confluence. This is reasons to buy into the trade, to have a visual representation of what price action is doing. That's literally what every indicator does. Besides maybe like a divergences, right? Like we discussed earlier. So it's a visual representation of what price is doing. So, I wonder what price is doing. The 1 minute is actually trending. How about that? How about that? 1 minute is trending. The 15 minute is doing a mean reversion. Turn it back to the moving average. Back into value, if you want to say. I didn't get into the anti-pattern. So we have that here as well. Anti-pattern price. I'm not discussing that. I can reach out to me, ask me, reach out to me via the comments. Yeah, I'm gonna call it a night, right? Is that hard? Nah, that's what ICT was saying. But I'm just having a little fun. I'm not. Everybody got their own level of understanding, their own level. Oh, so we kind of like walked through the whole entire day. So after price, and here I go, right? After price, I was leaving. Thought you was leaving, bro. Anyway, after price ran the lunch hour high. So again, where's price going? How would it get there? How go? Where's price going? Where is it going? Where's price coming from? Sorry. Where's price coming from? How would it? Oh man. Somebody in the back say it, please. All right. Where's price coming from? Where is it going? And how will it get there? Where's price coming from? Where is it going? How will it get there? It went to the lunch hour high, ran that. Now where is it going? If we saying that the 15-minute was a mean reversion, then okay, we may want to anticipate some degree of a pullback. And that's that. You want to say, oh, it may continue with trend. Either way, it's still a short opportunity. But once it gets down, all right, let me because we need to see things sometimes, right? So once it gets below 50%, now it becomes less. So this is your short opportunity, turtle soup. Same turtle soup. Displacement. And you got a breaker here. So that's why it's not going to pull all the way up, because you have a high, low, higher, high. Anyway, where were we? Having too much fun. So the EMA is actually crossed over here for your short opportunity. Didn't do all that here, but we do have an opportunity. Here's a small little fair value gap. Green jumped. Okay. And that would be your short entry here. Same. It's a breaker here, but it's a fair value gap here. Or you don't like that fair value gap, then you can do like this wick. See what that looks like. I'm just talking, Paul. Take that out. Let's see what that would do. See what I'm saying? So the bodies. Let's put the price on there. Can we get a price? Can I get a price? Price check. 55312. And what's the close of this candle? 55312. Let's make that bigger. I'm gonna delete it like right now, but I'm making it big. So, 55312, and the close of this candle again is 55312. Look right here. Where were we? 55312. So you can utilize the wick if that's your thing. Utilize the fair value gap if that's your thing. Still got like, this is your thing. I think like this was inverted fair value gap. Technically it was reclaimed here, then it fell back through. So technically you can use this still as well if that's your thing. And you can see I'm eyeballing it, but it held below consequent encroachment. So you have a couple of things. If that's whatever your thing is, to stick to it. Your trade strategy is stick to it. So look at price right now. So you probably want to say like, okay, before this was resistance, now this 5-minute fair value gap was causing price to go down. Now let's see if it's an inverted fair value gap. And we can, all right, so boom. So we have this breaker, right? High, low, higher, high, and just take that last candle here and just drag it out. This whole thing would be breaker block though, but take this down close candle, this one here, drag it out, and you have this. Let's see what that looks like. See what that looks like. And if that's, so yeah, right? I usually make that like a purple, just a, so here we have, so yeah, we have mean reversion, price holding below the midpoint, pretty much stabbing through it, sweeping above the midpoint. So you can have that, or you can have this 5-minute, doesn't matter. Or you can have this 1-minute fair value gap tiny, or this 5-minute balance. It's up to you. And so we still have the 1-minute chart as trending lower for confirmation. So I would like to have seen, let's see here. I would like to have seen price trade back to below here, because they say where's the original consolidation. So technically this is the original consolidation, this whole thing here. Anyway, we have these imbalances and 1, 2, 3 drives pattern. 1, 2, 3 drives pattern. So that's the reason, that could be a reason why I didn't go sweep any of these lows here, because this is a sign that liquidity was taken from the market for now. And only thing I'm waiting for, I want to see what price does with this fair value gap. So I ain't gonna talk your head off though. So you have 1, 2, 3. You have this. This is like the end of the day. 4 o'clock run up. You could have caught that. So you have a break in market structure with these. So you have a run on stops here. So you have a run on stops here. You had a break in market structure here. Boom, you would have got stopped out. What time would that would have been? Probably could have considered that. But you also don't have, you would have been targeting here. So you have 1, 2, and then 3. I don't know. So that didn't happen until they have this. Yeah, so this is why you kind of reference a higher time frame, because here it doesn't tell you to like really have a strong conviction in this. And then you have this run on stops here. Run on stops here. Have a market structure shift running above the 353 candle, and the retracement into this inverted fair value gap. Or what we have highlighted here, which is a 1-minute bullish fair value gap and push higher. So here to here. Oh bueno, long wick. Let's see. Do that, and then this. All right, so if you did that, then this would still be like, that's like being like drug addict or something. Like, why you want to try it? Why you want to try all that? Why you want to try that? You know, why you want to try that? Like, all right, so you may have missed this, but it's an opportunity there. But you can still see here, like you have a low, you have a high, you have a low, you have a higher low and a higher low. So you can count that as like a opportunity to go long. We finally reached the imbalance. Let's see what it does. Anyway, I'm out. I don't want to leave y'all. Anyway, I'm going. I got other stuff to do. Please like, comment, subscribe. Please like, comment, subscribe. Like, let's have a conversation. Anyway, I'm out. Let me know how this. Let me know what happens. Actually, same. We have a bullish ride gap here, but it can pull all the way down here because this is the break in structure. Here's your run on stops. Here's your break in structure. Another break on structure or run on stops. Yeah, it can pull all the way back down into here at least because you're thinking premium to discount of this range. So we are in a premium. Anyway, let's go back to see what happens here. Anyway, I'm out. Deuces.